All right, let's lace up and jump right into this deep dive into Allbirds Q4 2024 earnings call. They've had a bit of a bumpy ride this past year as they try to, really solidify their place in the retail world. So we're here to break it all down. Like, what did they say? What does it mean?
Yeah, and it is interesting because, that revenue came in at $56 million for the quarter, which isn't earth-shattering, but they did actually beat expectations on their adjusted EBITDA, which came in basically flat year over year with a loss of $19 million.
So not exactly the kind of news that's going to, send investors, rushing to buy. But maybe there's more to the story here. What jumped out at you when you looked at their financials?
Yeah, I mean, look, it's not a, runaway success, but there are some interesting points. One thing that I thought was interesting is their focus on cost management. Their SG&A expenses, excluding things like stock-based compensation and depreciation, were down 24% year over year. So that landed them at $24 million.
Okay, so really trimming the fat where they can. I mean, that makes sense given the economy, the way things are going right now. Did they talk about how they plan to deal with this kind of, choppy economic environment as we go forward?
They did. They're very aware of the macroeconomic environment and how it's impacting consumer behavior. I mean, there's a lot of uncertainty out there in the market. However, they're still projecting full year 2025 revenue between $175 million and $195 million.
Wow, that's interesting. Projecting growth during, kind of uncertain times.
Right.
But there's got to be more to that revenue projection than just that, right?
Yeah, you're picking up on something there. That revenue figure includes a hit of about $18 million to $23 million from things like their store closures and some transitions they're making with international distributors. They're kind of, strategically shrinking their footprint here in the U.S. They closed 15 stores in 2024 and another 5 after the quarter ended. If you kind of take those transitions out of the picture, they're aiming for about 10% growth at the midpoint.
Okay, so a little bit of, cautious optimism mixed with some strategic, tightening of the belt. What's their game plan to achieve this growth? Are we talking new products, big marketing blitz, trying to take over the world?
Well, maybe not world domination just yet, but their strategy seems to be focused on 3 main things: product innovation, impactful marketing, and a much better consumer experience. They're refreshing their core product lines and some of the new stuff coming out. A court-inspired shoe, a waterproof collection, and some cozy slip-on options for the colder months.
Okay, so branching out a little bit, I like it. What about the marketing front? Anything like a, Super Bowl ad in the works?
Not a Super Bowl ad, but they're launching a new brand campaign called Cards on the Table, and get this, it's going to be hosted by Stanley Tucci.
Wait, Stanley Tucci, the actor? That's unexpected.
I know, right? Definitely an unconventional choice. But the idea is to create this, engaging long-form content that will get people talking and bring more people to the brand. So less about, directly selling and more about telling stories.
Okay, I see. So elevating the brand and kind of standing out from all that, usual marketing noise. Pretty smart. What about this, revamped consumer experience? What's happening there?
They are completely overhauling their website, trying to make it much easier to use and much more visually appealing. They're also trying out a new store layout at their San Francisco location. And if it works, they'll roll it out to other stores during the year.
Okay, so a lot of work going into making the whole shopping experience smoother and, more interesting. Sounds like they're all in on, this brand refresh to really drive that second half growth they're looking for. Streamlining operations, new products, that unique marketing campaign, better shopping experience. It's a pretty comprehensive approach.
Yeah, you got it. It's a bold strategy, especially with how the economy is right now. But they do seem to have a clear vision and they're fully committed to making it happen.
Okay, let's put on our analyst hats for a second. Big picture. What message are they trying to send to the market with all these moves?
I think they're acknowledging the challenges they're facing and taking steps to directly address them. They're not pretending things are easy out there in the retail world, but they're also not giving up on their growth goals.
So a realistic view of the situation, but still a lot of determination, that could be a positive sign for investors who are thinking long term. But before we get ahead of ourselves, what about their guidance? What kind of financial roadmap did they lay out?
They're projecting a full year adjusted EBITDA loss between $65 million and $55 million. But here's the thing. They're anticipating a heavier weighting toward the second half of the year, both in terms of revenue and profitability.
Okay, so a little bit of a waiting game for investors, hoping that all these efforts start to pay off, a bit later in the year. Why the emphasis on the second half?
Well, because a lot of these initiatives, like the new products, the marketing campaigns, and the website revamp, are all slated to, really kick in around Q3 and Q4. And they're specifically expecting to get back to top line growth in Q4.
So building momentum and finishing the year strong. All right, let's get granular. What about the numbers for Q1? What should investors keep an eye on for the next earnings report?
For Q1, they're guiding revenue to be between $28 million and $33 million. That's a year-over-year decline of about 22% at the midpoint. And they're anticipating an adjusted EBITDA loss between $28 million and $25 million.
So a potentially rocky start to the year, but they are laying the groundwork for a turnaround. What's driving that anticipated Q1 loss?
Part of it is their planned increase in marketing spending, especially for that new Stanley Tucci campaign. They're making a, calculated investment to boost brand awareness and hopefully drive future growth.
Okay, so Q1 is all about streamlining things and setting the stage for a comeback later on. Now, I know you've been cooking up some, shall we say, interesting trade ideas based on this earnings call. So let's move into our This Is Not Financial Advice segment. What kind of wild but plausible trades are you seeing here?
All right, full disclaimer, this is all hypothetical and for entertainment only. Okay, so let's say you're feeling bullish on Allbirds' turnaround plan. You think they can pull it off with these product and marketing strategies and get back to growing? You could maybe think about a long-dated call option play, betting that the stock price will go up, let's say, by late 2026.
So riding the wave of that turnaround, hoping that things really start clicking in the long term. Why target such a far-out date?
It just gives their strategy time to actually play out. Remember, they're projecting a return to growth in Q4 this year, but it's probably going to take more time for the market to really process what they're doing and for the financials to really reflect that turnaround.
Gotcha. So patience is key here. You're essentially betting that the market might be undervaluing their long-term potential, especially given their focus on innovation, sustainability, and brand building. What about another trade idea, maybe even a little wilder?
Okay, this one's a bit more out there. Let's say you're really into Allbirds' focus on sustainability and you think they can be a leader in this whole, circular economy thing. What if they go all in and launch a shoe recycling program? Like customers could trade in their old Allbirds and get a discount on new ones.
Oh, wow, that's interesting. It definitely taps into that, growing demand for sustainable products. And it fits perfectly with their values. How would you turn that into a trade?
Well, if you think that kind of move could be huge for Allbirds, boosting their brand and giving them an edge over the competition, you might just buy shares outright as a longer-term investment. You're basically betting on them being able to innovate and take advantage of this whole, emerging trend in the footwear industry.
Right, so a more fundamental play, betting on their ability to stay ahead of the game and really disrupt the industry with their sustainability focus. I like it. But again, everyone, remember this is all hypothetical and purely for entertainment. Always do your own research and talk to a financial professional before you make any investment decisions.
Exactly. Due diligence is key.
All right, that wraps up part one of our deep dive into Allbirds Q4 2024 earnings call. They're tightening their belts, streamlining operations, and placing a big bet on this brand refresh to try to reignite growth. The market seems a little unsure for now, but the real test will be in the second half of this year.
Yeah, it'll be really interesting to see if their strategy takes off or if they stay grounded. Join us for part 2, where we'll dig deeper into their competition, their growth prospects, and explore some of the risks and challenges ahead.
Welcome back to TalkTickers. We're continuing our Allbirds deep dive and getting into the nitty-gritty of their strategy.
Yeah, we've talked about the financials, their plan for a turnaround, and even brainstormed some, let's call them creative trade ideas. But I want to zoom out a bit. What does the competitive landscape look like for Allbirds? Who are they up against, and what kind of challenges are they facing? Well, the footwear market is, to put it mildly, crowded.
Yeah.
You've got the heavy hitters like Nike and Adidas who really rule the athletic wear space. And then, a ton of brands catering to every niche you can think of, hiking boots, fancy sneakers, you name it. Allbirds has sort of carved out this interesting spot for themselves. They're the eco-conscious, sustainable choice.
Right. They definitely made sustainability a core part of their identity. But is that enough? I mean, can that really make them stand out in such a packed market?
Yeah, that's the big question. I mean, Consumers are definitely more aware of sustainability and ethical sourcing than they used to be, which is a good thing for Allbirds. But it's not enough to just talk about it anymore. You've got to walk the walk. They have to keep innovating and show that they're really committed to sustainability. Other brands are catching on. They're using sustainable materials and practices too. So Allbirds needs to find a way to set themselves apart, not just on sustainability, but on style, comfort, and their overall brand.
So it's like this balancing act, staying true to their values while still moving forward and staying ahead of the game. What are some of the specific challenges they're facing?
Well, one challenge is keeping those prices high, that premium pricing. Consumers are getting more and more price sensitive. And then you've got those fast fashion brands that can churn out trendy stuff at way lower prices. So Allbirds has to convince shoppers that their products are worth that extra money, that they're paying for quality, durability, and that ethical factor.
So it's about communicating that value proposition, making sure consumers understand what makes Allbirds different and why it matters. What about growth opportunities? Where can they expand and grab more market share?
Going global is a big one, international expansion. They've already started in some overseas markets, but there's so much potential out there. Another opportunity is diversifying their product line. Right now they're known for their wool runners, but what if they branched out into other things like apparel and accessories? They could appeal to a wider customer base and become more of a lifestyle brand, not just shoes.
Right, so thinking beyond shoes and creating this whole ecosystem of products makes sense. But we can't ignore the risks. What are some potential roadblocks that could get in their way?
One risk is that people might just lose interest in sustainability. Or, what if other brands do it better? That could really hurt Allbirds' competitive advantage. Another risk is execution. They've got this ambitious plan, but actually making it happen is another story.
So being efficient and adapting quickly is key. They have to respond to market changes and what consumers want, on the fly.
What about from a financial perspective? What should investors be watching as Allbirds tries to turn things around?
I would keep a close eye on their gross margins. They want to improve them in 2025. But it's going to be tough. They have to balance their commitment to sustainable materials, which can be more expensive, with keeping their prices competitive. Another important thing to watch is customer acquisition cost. As they spend more on marketing, they need to make sure they're bringing in new customers in a way that makes sense financially.
It's not just about growth for the sake of growth, right?
Yeah.
It has to be profitable. Finding that sweet spot between getting new customers and keeping the bottom line healthy is super important.
Exactly. And that brings us back to their brand refresh. It'll be interesting to see how consumers react to the new products, the marketing, and their overall brand message. If they can pull this off, they could really cement themselves as a leader in sustainable footwear.
Okay, we've talked about their competition, their growth potential, the risks they face, and the key financial metrics. But there's one more thing we have to consider. The big picture, the macro environment. How is the current economy affecting Allbirds, and how are they dealing with it?
Well, they know that consumers are being more careful with their money, and they know that retail is uncertain right now. So they're laser focused on being as efficient as possible, streamlining costs, managing inventory, doing more with less.
Right, so tightening the belt and operating leanly, but still pushing forward with their growth plans. Did they say anything about how long they think these economic headwinds will last?
They didn't give specifics. They acknowledged that it's tough out there, but they didn't make any predictions about when things might get better. Seems like they're playing it safe, waiting to see how things shake out and adjusting as they go.
So being agile and adaptable is key. They need to react quickly and adjust their course as needed.
Exactly. It's kind of like sailing through a storm, You've got to keep an eye on the weather, adjust your sails, and be ready for anything.
Perfect analogy. Okay, we've dissected Allbirds' current position, their strategy, and the challenges they're up against. Now let's step back even further. What are the big trends shaping the footwear industry, and how is Allbirds positioning themselves within that landscape?
Well, one huge trend is personalization and customization. People want products that reflect their own style, their individuality. Allbirds has been experimenting with limited edition releases and collaborations, which could be a way to tap into that.
So offering something exclusive, something unique, catering to that desire for individuality. What other trends are you seeing?
Direct consumer brands are on the rise. They're cutting out the middleman and building direct relationships with their customers. Allbirds did that from the beginning. They used their online presence and social media to connect directly with their audience.
So they're taking advantage of that shift towards e-commerce and building a community around their brand. What about sustainability? Is that a trend that's here to stay, Or is it just a fad?
I think sustainability is here to stay, but it's changing. It's not enough to just say you're sustainable. Consumers want to see proof. They want transparency. They want to understand the entire life of a product, where the materials come from, how is it made, what happens to it when I'm done with it.
Right. So it's about showing real commitment to sustainable practices, not just talking about it. How is Allbirds addressing this?
They've been pioneers in this area, being very open about their supply chain and ethical practices, but they have to keep pushing, keep innovating, finding new ways to reduce their environmental impact and get consumers involved.
So it's about turning sustainability into a core value, something that's woven into every aspect of their business. What other trends could affect Allbirds in the future?
One trend I find really interesting is this merging of fashion and technology. We're starting to see smart shoes, shoes with sensors and tracking built in.
Smart shoes, wow. Is Allbirds looking into that?
Not yet, but it could be an interesting path for them down the road. Imagine Allbirds shoes that track your steps, analyze how you walk, or even adjust the fit based on what you're doing. It's a wild idea, but not impossible.
That would be a game changer. Okay, let's come back to reality for a second. What are some more immediate challenges they need to address?
Managing their inventory is crucial. They've had problems with excess inventory in the past, which can lead to discounting and hurt their profit margins. As they roll out these new products, they need to be really good at forecasting demand and not make too much stuff.
So avoiding those costly inventory mistakes. What else?
Getting and keeping great people is key. They've got a good team, but as they grow, they need to keep investing in their workforce.
Yeah, operational excellence and talent management are so important for any growing company, especially one trying to turn things around in a market that's constantly changing. What about their relationship with investors? How have they been communicating their strategy and their progress?
They seem to be pretty transparent and open, They give regular updates on their financials, their plans, and the challenges they're facing. They've also been actively talking to analysts and investors, trying to build confidence in their long-term vision.
So open communication and a willingness to address concerns. But at the end of the day, it's all about results, right?
Absolutely. They have to deliver on their promises. They need to show real progress towards profitability and sustainable growth if they want to keep investors happy.
Accountability and execution are key. Okay, we've covered a lot in this part of our deep dive. We've looked at the competition, the potential for growth, the risks, and the big trends that are shaping the industry.
Yeah, it's been a great discussion, but there's more to come. Join us for part 3, where we'll wrap it all up, summarize the key takeaways, and share our final thoughts on Allbirds and their future. We'll also be answering some great questions from our listeners.
All right, welcome back to TalkTickers for the final part of our Allbirds deep dive. We've really gone in depth, haven't we? Their financials, that ambitious turnaround plan, the competitive landscape.
Yeah, we've covered it all. Their strengths, weaknesses, the opportunities they're chasing, and the real threats they're facing. It's time to put it all together and see what we can make of it.
Exactly. Let's step back, big picture. What's our overall take on Allbirds' position and their potential?
Well, to be honest, it's a mixed bag. I mean, they've built a solid brand with loyal customers, they're really committed to sustainability, and they're actively addressing their operational issues. But there's that fierce competition, a tough economic environment, and still some questions about whether they can pull off those ambitious growth plans.
So the classic high-risk, high-reward situation. What are the key factors that will determine their success?
I think it comes down to 3 things: innovation, execution, and standing out from the crowd, brand differentiation. First, they can't let up on innovation, not just with products, but with marketing, customer experience, and sustainability. They need to stay ahead of the game and keep their customers happy.
So always pushing the boundaries, experimenting and evolving. Why is execution so crucial?
Because having a vision is great, but making it happen is a whole different ballgame. They need to be efficient, manage inventory well, control costs, and nail those product launches and marketing campaigns.
It's all in the details, making sure those big ideas actually produce results. And lastly, brand differentiation. Why is that so important in such a crowded market?
Well, consumers have so many choices these days. Allbirds needs to give people a reason to choose them over everyone else. They have to emphasize not just sustainability, but comfort, style, and quality.
So it's about creating a brand story that really connects with their audience and makes them stand out. We've talked about the challenges, but let's flip it for a second. What are some reasons to be optimistic about Allbirds?
Well, they've got some strong tailwinds. The demand for sustainable products is only going to grow, and they're in a great position to capitalize on that. They're also benefiting from that shift toward e-commerce and direct-to-consumer brands. And they've already built a solid brand with a loyal following.
So the potential is definitely there. It's about harnessing those tailwinds and navigating the challenges. Okay, let's get to some listener questions. We've got some great ones.
All right, fire away.
This first one is from Sarah in Seattle. She asks, I love Allbirds' mission and their commitment to sustainability, but I'm worried about their valuation. Is their stock price justified?
That's a smart question, Sarah. Valuations are always tough, especially with growth companies like Allbirds that aren't profitable yet.
Wow.
The usual metrics like price to earnings ratios don't really apply. Investors are basically betting on future potential, which is always uncertain.
So kind of a leap of faith based on their ability to deliver.
Exactly. There's no easy answer. It all depends on your investment style, your risk tolerance, and your assessment of their ability to execute those growth plans.
All right, next question is from John in Boston. He asks, what are some specific steps Allbirds could take to improve their profitability?
We touched on this a bit earlier, John, but there are a few key areas. First, they could keep streamlining operations, find ways to cut costs and be more efficient. That could mean optimizing their supply chain, getting better deals from suppliers, and maybe even automating some processes.
So making every dollar count and getting more out of their operations. What else?
They could focus on boosting their average order value, maybe offering product bundles, cross-selling accessories, or giving people incentives to buy more. And they could explore new revenue streams. That might mean licensing their technology, partnering with other brands, or expanding into new product categories.
Right, so diversifying their income and finding creative ways to use their brand. Okay, last question. This one's from Emily in Chicago. She asks, what's your long-term outlook for Allbirds? Do you think they can become a major player in the footwear industry?
That's the million-dollar question, Emily. I do think they have the potential. But it won't be easy. The market is incredibly competitive, and they've got some big obstacles to overcome. But they also have unique advantages. That strong brand, the commitment to sustainability, and a talented team.
So they have what it takes, but success really depends on execution, innovation, and maybe a little bit of luck.
Absolutely. It'll be interesting to see how it all plays out.
Well, that brings our deep dive into Allbirds to a close. We've explored their business, analyzed their strategy, and hopefully given you some food for thought.
And as always, remember, this is just our perspective. Do your own research and due diligence before making any investment decisions.
Exactly. This podcast is for informational and entertainment purposes only. It's not financial advice.
We always appreciate your comments and questions, so please share your thoughts below.
We love hearing from our listeners and having these discussions.
Until next time, happy investing, everyone.